As always, wonderful and beautiful, glorious day it is, ladies and gentlemen. This is the day the Lord has made. Let us all rejoice and be glad in it. Absolutely. It is a super Saturday. Absolutely, it is. It is a super Saturday. It is May 25th, 2024. All right, it's YT on YT, yours truly on YouTube. And this is your weekly trade watch list. All right, for May 26th to June 1st for the next upcoming week. Okay, you feel me? So once this screen gets to upload, we can go ahead and start sharing what we're looking at on gold. All right. So bit of a drawback week for me. Absolutely, I like to keep it at 100, keep it a dial wow, keep it a buck. Bit of a drawback week for me as far as my account went backwards. I think it went backwards by around like anywhere from $90 to $95. I know it's right less than 100. But anyway, hey, I even show you. Yeah, that is no longer the 262, no longer the account. It's like 195 if I'm not mistaken. All right, but hey, it's gonna happen. The thing about it is, the times when it do happen, are you able to bounce back? Are you able to recover from it? That's what happens. It's just like a defensive back. You can look at all pro defensive back in the NFL. At times he's gonna get mossed. At times he's gonna get a touchdown scored on. At times he's gonna blow a coverage. But can you bounce back from it? It's gonna happen. So 192.67 account. Not tripping. We still ahead as far as the daily growth percentage we're looking for as far as because started this account roughly with 124.73. So when you're doing the daily compound interest, daily growth, it doesn't allow you to put in. It doesn't allow you to begin with a decimal. You have to put a whole number. So 125. Okay, and then we're now at 525. So roughly right here, account needs to be at 173, $173 and $173.03. So like I said, we are still on track because the account has 192.67. So we still good, bro. We still good. All right. So stay focused on that. Thing about it is, you want to mark off your points of interest being divergences followed by changes of character. So right here we see on the M5 time frame on gold how this is a divergence followed by change of character. Why? Because you have price slanting lower like this on the candlesticks, and you have the RSI doing the complete opposite, going upward. That is called a bullish divergence. This is the last area, the last level, the last known level of supply that pushed down, broke this low, broke this structure right here, created this new low, and this simply accumulated, reaccumulated, bam, filled the supply zone, caused a change of character. Now price has simply done what? Accumulated, reaccumulated, it created a distribution. Okay, this one had a UTAD and a test involved in it. Price simply, this was the up thrust. Price came down, popped up again, UTAD and test, sold off. Now it has already mitigated this POI right here because this is a level of interest where the buyers could possibly come back into the market. So that's why I had this orange horizontal ray sitting right here and it's already been mitigated. And as you can see, this right here being a bearish divergence followed by a bearish change of character. Price is slanting upward and price is simply doing what? Slanting lower on the RSI, right? Which means that is a divergence. The midpoint right here, change of character, right? So price reversed internally, it may be bearish and it may want to do what? Accumulate off of this level and want to go back bullish, break above this high. Okay, but every divergence and change of character is a zone of interest. Okay, it's an area of interest where the buyers or sellers come in. Bullish divergence, bullish change of character, area of interest where the buyers can come in at. Bearish divergence, bearish change of character, area of interest where the sellers can come in at. And I'll just simply trade off divergences and focus on the footprints in the sand. That's what I like to call it. Focusing on the footprints in the sand. All right, focusing on the footprints in the sand. All right. So right here, simply we got this right here on one time frame. Let's go to the 1 minute, and you simply see what price did what diverge like this, and it did what bam, here's change of character. So the price do right here, simply slanted lower right here, see slanted upward, the bullish change of character, right? So mark those out and mark those areas. Those are areas of interest where the buyers or sellers can come back into the market. So I don't know what's going to happen when this market opens back up tomorrow. But you have your areas zoned out. You do not want to be married to a bias, which means you don't want to be married to the buys. You don't want to be married to the sales. You don't want to simply come to the market. Oh, I'm looking for buys. Oh, I'm looking for sales. You want to come to the market with this. If this is going to sell, this would need to happen. If I'm looking for buys, this would need to happen. If I'm looking for sales, this would need to happen. That's what you want to do. That's how you want to approach the market. Now, okay, cool, I'm looking for sales. And then while you were looking for the sales, the buy opportunity appeared in the market. Or while you were looking for a buy opportunity, the sell opportunity appeared in the market. You don't want to be married to a side the market is going to. When your trading plan and opportunity presents itself, you take advantage. You simply take advantage. Okay? Now the thing about it, this is think about it. The thing about this is this: on the daily time frame, it's attempting to create a bearish divergence. It's attempting to create a bearish divergence. Okay, so I'm gonna simply remove this. Um, it's attempting to create a bearish divergence. Now, in between here, in order for this to go back bullish and break up above here and create a high, this is what it is on the blue. Is on the blue. I mean, it's a 4 hour change of character, H4 change of character, which means it's a 4 hour accumulation. You see how price slanted lower right here, and it's going to be slanting upward on the RSI or equal lows. You see how it's showing equal lows? That's a bullish divergence. So price did what? Accumulated, reaccumulated, had a bullish change of character. Created this high, did what? Distributed, redistributed, bam, accumulation low, accumulation, reaccumulation, broke the structure, created this high. Distribution, redistribution, accumulation, reaccumulation, broke the structure, created this new high. This is what happens in the market. Okay? This is absolutely what happens in the market. Okay? So here are the lows and the highs that we were just discovering on the H4. Look at it. You can see how price diverged right here. Price went upward, price went low. Boom. Change of character right in between here. You got your redistribution, and what you got right here? Oh, accumulation. Price went what? Lower. Price went what? Upward on the RSI. What do you have right here? Boom. Change of character. That's how this market prints. This is how this market prints. This will be a BOS. This will be a break of structure. Okay? This is how this market prints. Then didn't we say this was going to be the next high? So check this out. Look at this. What's happening? Divergence. Price line upward. Got roughly equal highs right here. Cool. Change of character. Redistribution. What we got right here? Accumulation. You can see even from the 15-minute time frame, now this is slanting lower, and then this is slanting upward on the RSI. Boom. That means right there that this green wick, that's an internal change of character. Price came back to do what? Respect the demand zone, the POI that caused a change of character, right? And then what? Boom, gone bullish. So you got to be able to identify that. It's going to happen all the time. You identify them divergences and changes of character. It's going to happen. It's going to fall right in your lap. It's going to be like putty in your hand. It's going to be like putty in your hand. Okay. So let's simply get rid of this. Going back to my divergences. Noticing what's happening with those divergences is they are simply pivots in the market. They are simply pivots in the market. Okay, let's see. We can go look at another. Let's go look at Bitcoin. We could probably get a possible trade opportunity on Bitcoin if it presents itself. All right, if it presents itself. Okay, I'm gonna erase all of this. Yeah, I'm gonna erase all of this. So, oh snap! You on a day? Let's see. All right, so we can erase all of this. Now that the market has done some things with, Bitcoin, let's see what we're looking at. Okay, you can see how price tapped into right here, this demand zone right here. But this demand zone accumulated, reaccumulated, and it did not lead to irrespective. This demand zone right here broke structure, but this just took internal liquidity, tapped into the supply zone, then did what? Rolled down, broke this structure, and overall broke this structure. Okay, so how would you mark this up on the daily? Is just simply like this. This being a high, do this being a high, this right here being a low, this right here being a what? Lower high, roll around down, and then this being a breaker structure right here, lower low, right? Bam. Right? A breaker structure is also liquidity being taken. Okay? A breaker structure is also liquidity being taken. All right, so there's liquidity took. When price decide to what? Break that low, take that sell side liquidity, what do it do? Diverge, rally back up, right? Rally back to the other side. Okay? So we see that this supply zone failed. So now I went back bullish. So now this right here will be an internal breaker structure right here. Because what happened? In order for price to do this retracement, price has to do what? Bears diverge, have a bears change of character. So it had a distribution, had a redistribution, had an accumulation, reaccumulation, and then what? Broke structure. So now guess what? This will be a BOS, right? This will be a BOS. And this right here becomes an area of interest in the future. This right here becomes an area of interest in the future where the buyers could possibly come in and accumulate off of this level and push this thing back bullish. So you have to zone this out. Or this may, if price pushes through, then it becomes what? Liquidity. But we don't guess. That price may get the area, give you your confirmations, and then hey, it's gonna come to you. Just be patient. Just be patient. All right, cool. So now if we're looking at internal, if we're gonna look at internal market structure, let's see. This being a low. All right, this being a high. Price rolling down, break the structure again, right here. Creating a new low. So you got different types of ways to trade. You got certain people that'll wait for this breaker structure because, like I said, if a breaker structure below is taking sell side liquidity, and people actually wait for the bullish divergence in order to rally this back up. Versus a POI, they'll look for price to they'll wait for price to break structure, change character, versus trading from a supply or demand zone, which is absolutely fine. You can trade either way. It's absolutely fine. All right. So um, what you want to do though is okay, cool. You see how right here on the daily, how you had this bullish move right here. You had this first green bullish candlestick. You had this wick right here, right? Obviously, price closed somewhere down here on this daily candlestick, and it opened up, pushed down a little bit some point in time, and then did what? Shot up, right? Shot up this high, and then closed right here. Then it opened up where right here, shot down a little bit, then closed up. I mean, pushed up here and closed right here, right? Now here's the deal: the wicks between the first bullish candlestick and the third bullish candlestick are supposed to be touching. They're supposed to be mitigated, right? If it doesn't, when you have a wick on the upper, if you have an upper wick that's showing on the first bullish candlestick, you have a clean volume body of the second bullish candlestick, and the third bullish candlestick, the wick below, is not touching the wick of the first candlestick. That's what you call a fair value gap. And what it is that it's a void of liquidity or a liquidity void. So what people will do is they'll mark out the wick of the third candlestick, the bottom wick, and they'll mark out the upper wick of the what? First candlestick. So in this area is the fair value gap. And what a lot of people like to do is this. They'll take the GAN box and simply over here, and they'll take the bottom wick of the third candlestick and stretch it to the bottom to the top wick of the first candlestick. Okay, they'll stretch it like this. Okay, and what they'll do is that, hey, you know what? We're gonna look to go to the consequent encroachment, which is a fancy word for saying, hey, we're gonna look for buys at 50% of the fair value gap. 50% of the fair value gap. So that's what this move did. Simply pulled back, filled that imbalance, filled this liquidity void, and simply did what? Distributed, redistributed, accumulated, reaccumulated, broke structure, created a new high. Right? That's simply what happened. Okay? That is simply what happened. Any questions, problems, or concerns? Any questions, problems, or concerns? I have a view. What's up with? I appreciate you. I got two viewers. I appreciate each and every one of you for taking time out of your busy schedule to be able to view this live weekly trade watch list. My thing is, I'm gonna start doing these on Saturdays. I know a lot of people got things doing on Sundays, church, and whatnot. So yeah, I'm gonna start doing these on Saturdays, and we're not gonna be having a session on Sundays, and then we'll get back to the grind Monday morning. Right? So Bitcoin, cool. Price broke structure. Got a daily imbalance. Let's go to the 4 hour, because now what's happening is this: you have price doing this, okay? Where you got your little bullish flag. Let's see. Okay, cool. Okay. Boom. Let's go to the 4 hour. Let's see what's popping. Here's the deal. What do we have on the 4 hour? I see price did this. Sort of a bearish flag. So I mark this out like this. And then guess what? We have an imbalance. We have a supply zone that has an opportunity for the sellers to come into the market. Has an opportunity for the seller to come into the market. Now you have to simply be patient and wait on confirmation for the sellers to appear if the sellers want to come down off of this market, right? So you have this area, and then you have this area. You got your spot above here. Areas of interest. Boom. Let's go down to them without. So check this out. Price diverged right here. Had to change character, came back into this demand zone, and did what? Rolled up, broke the structure, started going up. Let's look at it from a lower time frame perspective. You can see the divergence right here. Boom. I can show you without even looking at the RSI. This right here is a divergence. This is a divergence. This right here is a change of character. Price came back into the what? Imbalance right here. It's POI. Right here. Or you can draw it like this under the base of the candle, which is less of a risk. And price did what? Diverged, changed character off of here. So let me show you. I've been looking at divergences since I started learning how to trade harmonic patterns, and harmonic patterns got divergences in it. So I can be able to spot it with the naked eye. So let me show you how it's a divergence. And this is the change here. I don't know how it's going to appear on the, I don't know if it's going to be very revealing on the M15 RSI, but it might be on the M5. So we're going to check it out. So here's it. Look. Bam. Look at it. See? Told you the divergence and change of character without even looking at the RSI. I showed you without even looking at the RSI. I told you when you be able to, what I call develop that trader's eye, when you be able to develop that keen trader's eye, it's chart work. It's chart work. It's putting in work. It's developing that eye. When you understand how a market prints, it'll just come to you. So check this out. Look at this. Boom. What's this? Bam. Slanting lower, slanting upward. Bam. Midpoint. Change of character. So guess what? Price went up, created a high, came back, distributed, redistributed, boom. Look at it. You can look at it on this time frame. You can see how it diverged. Slanted lower like this. Boom. What happened right here? Slanted up. Right? But it's more revealing on the M5. So we can go to the M5 and look at it. Right? Look at it. So cool. Bam. Left hand balance. All right. Bet. Okay. Oops. Bring it back. All right. Cool. Here it is. Look. Price diverged. Bang. Right? M5 time frame. Price diverged. Boom. Right here, right? This is the true change of character because this is where it started diverging. If you pull it all the way back here, you see how it lines up, aligns with my cursor. Started diverging right here. It's that peak of that last known supply zone right here. So this is the true change of character right here. Bam, right here. But obviously you would have missed that move if you was waiting on that change of character because here's the deal. You got to understand how a market prints. What causes the market to go bullish from here to up here and create this high and come back down, create this low? This was an accumulation. So guess what? On the M5 or M1 time frame, this right here is a break of structure. Okay? And this right here, this right here is an area of interest where the buyers could have simply came into the market. But guess what? They took that liquidity. This right here was liquidity below here because what people like to do is this. They simply like to do what? Place those stop loss orders right below the zone, right? So guess what? Liquidity was taken. That makes sense? But above and below those POIs where you see me, I'm creating a divergence and change of character. It's liquidity above and below those areas. But does the price want to take that liquidity out? Like right here, it's liquidity below on the M15. It's liquidity sitting below this divergence and change of character. But the market didn't want to take that out because guess what? They had enough fuel. The buyers had enough fuel in order to make that move up to the upside. That makes sense? Type number five in the chat that makes sense. Type number 5 in the chat that makes sense. I'm thinking maybe one of my nephews may be watching. One of my 3 nephews may be watching. They follow me on here too. It's all love for them. I appreciate nephews. All right, so look, price diverged, change character. Now here's the deal. Here's the truth. Here's the real spiel. All right. What do you have right here? This right here is a fair value gap. You can see how price created what you call, this is almost similar to tweezer bottoms. Okay, some bullish signal at a level of support or demand. All right. So what you have is nice clean candlesticks, and what you have right here is a gap. Right. What you have right here is a gap. Right here, and price came and set right in that gap. Price came and set right in this gap. Okay. The fair value gap. Remember, I showed all of you with the GAN box. If you take it from the third candlestick, put it down to the first candlestick, and stretch it out, you see how the market hit that 50% area, because that's like a discounted rate of the fair value gap. And then price did what? Boom, shot up. Okay, price shot up. Makes sense? Makes sense to make dollars. All right. So let's continue to mark out Bitcoin, because obviously Bitcoin has no stoppage, no time. Just keeps printing candlesticks. So we now know that because price had a change of character, it came right here and rested, refilled this imbalance right here. We now know that what? This is now a POI. This is now an imbalance. Does that make sense? This is now an area of interest. This area is now an area of interest because it caused this change of character, but ultimately it did what? It caused this break of structure right here. Okay, it caused the BOS. All right, so you still have this unmitigated, okay, as an area of interest. You don't just simply, oh, you know what? I'm gonna go ahead and slap a buy limit on there and call it a day. Cool, stop loss below this low, and then boom, we good. No. That's called a risk entry. And why is it called a risk entry? Because you're risking losing that trade. The chances of you winning that trade are slim to none, because you have no evidence. You have no evidence of the market wanting to buy from that area, or the bulls wanting to buy from that area. You have no evidence. All right. So here's the deal. All right. This is how you follow price. Okay, cool. You see the supply zone being mitigated. What happened? Create the low. Boom. Pushed up. What happened? So guess what? Let's see. This right here. Boom. Supply zone mitigated. All right, cool. Bet. Boom. Broke structure. Bam. Diverged. Came back up. Didn't respect the supply zone right here, right? Does that make sense? This is how you follow price. This is how you follow it. This is how I'm following it. We're on the M15 on Bitcoin. Okay, cool. It left this open and unmitigated for a reason. Don't get it twisted. Don't get it twisted. You got to be able to read the story. Boom. Popped in. Broke the structure. Boom. Broke low. Okay, took sell side liquidity. Rolled back up. Came back to the supply zone. You would think, hey, we're supposed to respect the supply zone because it did what? Went down, broke this old structure, created a new low. Price came back up, bam, obliterated. Diverged, changed character, distributed, redistributed, created a what? Accumulation, bullish divergence, internal change of character, broke this structure, created a new high. Now check this out. You following price. You are absolutely following price. So check this out. Price came in here. Okay, cool. Bam. Now we got a what? Internal BOS. Right here. Got an internal breaking structure. We just following price. Just following price. Cool. That means what? If this broke structure, now we got it. This area is an area of interest now. That's an area of interest. So what? So let's check this out. You got price right here with this small accumulation, right? So then you could zone this off like this right here and see if the buyers want to come in off of this level. Okay. Now, what we have right here, let's go to the M1. Let's see. Hmm. Like this. You see how this pay card creating equal lows? It's creating this liquidity right here. Y'all see equal lows there to create. These equal lows right here. It's like a double bottom. All right. You just gotta be patient. You gotta be patient with the process. Be patient. Y'all mark this imbalance out right here. So that's the imbalance in the market. Right? This is gonna be the last example, and I gotta go. The Mrs. is calling. All right. So we know that this is a divergence and change of character. You can see it even on the RSI. Price is landing upward right here like this, and price is landing lower, correct? Which that means that midpoint is a change of character, right? Okay, price change character. So now price was doing what? Internally, it was doing what? Going bearish, right? Price doing what? Smacking the supply zone, doing what? Lower high, push it down. This right here is a break of structure. Right here, bam, right? Bam. Price came back to the supply zone, did what? Roll down, broke structure. Price came back to the supply zone, boom, went bullish. Had a BOS, bullish BOS, right? That's all you're doing, just following the footsteps of price. And more than likely, I'm thinking this is not a divergence and a change of character. So, but from what price has presented, the next possible opportunity for buys would be this area, because this is the most recent area that did what? Accumulated, reaccumulated, and broke structure up above. Okay, so you would just simply monitor this area and simply see if price wants to take out these equal lows right here, take out that liquidity, and say, hey, you want to know what? You want to go bullish, right? I'm looking at this as liquidity. The market wants to probably take out, because you know that's how the market moves. The market moves off liquidity. It's always moving from one liquidity zone to another one liquidity zone to another. All right. But I appreciate each and every one of you for taking time out of your busy schedule and listen to what I have to say. It's always greatly appreciated. I would never take it for granted. Have a safe, blessed, productive rest of your super Saturday evening. Know that I love you. And as I always like to say, God created us on purpose to fulfill a purpose, but more importantly, God has blessed where I am one. If you simply want to become a part of my free trade community, the links will be in the description below. You're going to see a Telegram link to a trading community chat channel. You're also going to see a Telegram link to a trading signals chat channel. All right. Hey, I look forward to working with you. I do call out live signals, do trade live. There's a weekly schedule already put out for the next upcoming week of when I'm going to be live. If you have your questions, problems, or concerns, feel free to reach out to me. All right. Have a safe, blessed, productive day. Y'all take care.